tired as really
Oh,
tired
yeah.
today. Need a good sleep. Yeah.
Well, we are live on YouTube, I believe. Live stream offline. Okay.
It'll catch up.
I'll catch up. Okay.
It threw me last week, and I thought, "Oh my God, what's going on here?" But no, it's
Oh, you
catching.
just got to wait, have you?
Yep.
You're off tomorrow, right?
Yes, indeed.
Good stuff. All right, buddy.
If that works.
Okay. Yeah, of course. Yeah, you need it. Give yourself a bit of time. Interesting happenings over the weekend and
What happened?
Friday.
Apart
Well,
apart from the fake news that Donald Trump wants to go under Mount Rushmore.
I haven't heard.
Yeah, that's a classic.
I wouldn't be surprised if he's, trying to pass some sort of executive order to get that to happen. But
Yep.
yeah, just interesting to and fro-ins on Capitol Hill. Trying to get this deal done, and not able to get it done. And I had my suspicions, but I thought the most kind of interesting thing about it, if I can use that word, I think there's probably a better word out there. But I thought the most interesting thing about it was the fact that there has been very little negativity, negative reaction with the market, and I find that really surprising. He's now signed an executive order to pass a bill, but it won't be enough, and he's going to face certain problems. I think there might even be some sort of legal problems, with the Democrats. So nothing major.
Sorry, I think we've got a problem. I think we've got a problem.
Oh, we do?
Yes. I got a funny feeling we're not streaming at all, which kind of means, can we find the ID for the meeting?
So I've got share computer sound. Find the ID for the meeting. Let me see where that would be.
Because apparently there's two floating around and we're not using.
Oh yes, sorry mate. Yeah. There was. A participant ID 189303.
Okay, that's supposed to be right then, I think. But I can't see anybody in YouTube, and I don't see any questions. I don't see anything.
No, I know there was a problem with the US one, but hopefully that's been removed now. Shall I come out and try again?
Hang on, I'll just check Facebook. See what's going on there. This is frustrating. This was supposed to be fixed. Right, definitely not live on YouTube, not on that link anyway. Facebook. Happening now. Play. And what I get is, can you put a chart up, mate?
My chart, well, I've got, okay, I can put UK 100 up. There we go.
Are you sharing?
Yes, it should be sharing as well. Let me, in fact, maybe I'll stop sharing. Here we go. Share screen. There we go.
Okay. Count to 10. Yeah. Okay. We're live on Facebook.
Fantastic. Okay.
That's a start.
Yeah, that is a start. That is a start. Well, good morning to everybody then.
Hello, everyone.
Yeah, how's everybody doing now? I suppose we should get to the pound trade. I have got a euro trade on, euro dollar short. I will give everybody the parameters, but it's actually beyond the levels anyway now because I entered it on Friday, and we can talk about that in a moment. But yeah, if you want to get the pound trade on, mate, we'll come back to this later on.
All right, mate, we'll do. I've also got a couple of trades and I'll point them out to you as well. So first things first, let's go to the pound, and the control panel is hidden. Here we go. Right, so pound today. I'm already in a pound trade from last week, so this may get a little bit complicated. Well, it shouldn't be. We're well clear of that. So, righto, our entry level today. Now, don't forget, we have changed the way we do this. This is still in beta test mode, and we will go long above this bar with the stop loss below that bar, and we'll go short with the entry here and the stop loss here. Okay, so that's a little bit different, and of course we are changing the way we take profit as well. So I'll place the short, and the level will be 130.46. 130.46 will be the entry, and the stop loss will be, I'll tell you in just a tick. Stop loss will be just above that bar, 130.76, let's say. So 30 pips we're gambling with there. Now the long will not be the reverse of that. We'll be trading this bar here. So the buy entry will be 130.70. Hang on a second, get that right. Doesn't look right. Let's say 130.78. And stop loss for that will be 130.65. I'll get this right, 130.65. Okay. Oh, pending order. Buy stop, not buy limit. That's better. Why won't it let me do it? Because that's below that, that's why. 130.78, no, that's right. What's going on? $130.78, $130.65. Won't let me do it.
I'll have a look, mate. Let's have a look. So you got volume. It's too high volume pending order. Buy stop. So buy stop 130.78. Yeah, that should be all right, shouldn't it?
Should. Maybe the expiry is wrong. No, that's not the answer. Let's try again. Change from there to there. Put that in. We're not too close to entry, surely.
Volume okay?
Yeah. Okay. Doesn't like it for whatever reason.
No, it doesn't, does it? That is strange.
All right. Well, that's the buy order anyway, guys. I'll sort this account out at some stage, and we'll go from there. You've got the parameters anyway, so I'll put them up here. 130.78 and 65. And 130.65. Sell. How's your weekend, mate? Anyway, you go for a dip?
Yeah, do you know what? I went down this morning. I thought I'd try I did have quite a few swims actually over the weekend, but I went at a high tide yesterday and it made the beach feel like a pack of sardines. So I didn't really enjoy that. When the low tide's there, it actually looks like quite open, but in high tide, you just jam it in. It's pretty tough to get any space out there, which is
Okay.
we are still in a bit of a danger kind of a dangerous period. So I don't particularly like swimming around people that are too close to me.
No, indeed not.
So yeah, there was too much traffic, but I went down to a different place this morning, but then there was nobody there, and I don't like swimming there either because anything can happen
Can't
out
win,
there,
eh?
and you need someone to shout help just in case something goes wrong.
Stick that hand up, mate.
Yeah, so I went for a run instead, which I'm not very good at.
Oh, goodness gracious.
Not happening.
Yep, we're right. Okay, there you go, guys. That's what you can follow. Again, we're in beta test mode. Do not put substantial amounts of coin on this until proven good or bad. Righto, so that is the pound US dollar. I'll quickly take you through the others that I'm in, and really the only others that I'm in are the ones I've got some opinion on so far this week. Euro Aussie is one. Now, I did want to trade this bar here, but I did say, or my analysis was that I would trade that bar there short if there was no gap this morning. There, of course, was a gap this morning. Not big, but it was there. And that stopped me placing the order. But now I want to place the order. Actually, I've got my stop loss in the wrong place there. I'll give you the parameters around this. The entry is at 1.6428. I'm going to change my stop loss, though. That should be at 6480, which will be 52 pips instead of 48. So we'll change that. That looks much better. And I will I'm using the default settings on my my EA here. So the first profit is at 15 pips. And I'm not going to remove a half. I'll remove a third at that. This is what you've got to fiddle with the default settings. And I will keep my stop loss where it is, which currently is at 52 pips. So we'll change that. And TP2, 45 is correct. Proportion to close 0. No, I think I will close because the monthly pivot's there. I'll close a second, third, and move my stop loss to entry at that point. So that is the order. The other trade, I'll just quickly go through it again. Entries at 1.6428. Stop loss is 52 pips above there, or at 1.6480 in case of slippage. TP1 is at 15 pips. We'll remove a third. And TP2 is at 45 pips. We'll also remove a third. We'll get rid of the TP-all. We don't want that. We will trail at that point and micromanage it in need. Right, the other trade is very similar to that trade. I'm actually already in it, but if you guys wouldn't be already in this, if you want to have a look at it, EuroCAD, it's pretty much the same trade. Entry is at 1.574, whatever it was. Of course, I've been slipped into this. I always get slipped in on IFS for some reason. I was trading this bar here. So the entry was actually at 1.5749. And the stop loss is 36 pips or 1.5785 on this particular trade, which is EuroCAD. And I'll go through that a little bit later on. Already in the trade, of course, if you wanted to follow that one, you would not be in the trade yet because there is the entry level there. Similar story, I will take profit at 15 pips because I think that's wise. However, I will close only a third of the position and leave my stops where they are, which is 36 pips. and I'll get rid of TP2. Why won't that let me change? Oh, okay. TP2. Yeah, okay. We'll leave that there, 45 pips, and we will remove a third again. And there we have the order. Again, 1.5749. We're going short EuroCAD, and we'll remove a third at 15 pips, which is TP1, and we'll remove a second third at TP2, which is 45 pips. We will again get rid of the target. We don't want a target. We will micromanage that in need. Okay, I'm looking at a couple of others, mate, but we'll go through that when you're done.
No worries, mate. No worries. Yeah, just to say, guys, really sorry we didn't. We haven't got YouTube working, and we didn't let you know about YouTube. I think our issue is YouTube's working out. Okay, yep. All right, fantastic. I mean, our issue is that we're trading sort of at this time of day. You know, this is really quite a busy time for us, so we really rely on the technology working without us having to fumble around with the technology, because we just want to focus on trading rather than technology. But yeah, just apologies that didn't kick on straight away. Anyway, let's have a look at the markets. Let's talk about the markets. I think the FTSE, the Dow, the Nasdaq, the S&P, even the DAX, they're all at very interesting levels. And I was looking earlier, and all of them really are putting in a reversal pattern to the upside. I don't really like the upside, is my problem with it. But you look on this. Let's look on a clean chart here. And it really just depends on what we garner from it, really. You know, on what we garner from the information we have. Does this mean that we should be looking at long equities regardless? Looks like that is probably the neckline for the inverted head and shoulders on the FTSE. So that's it may have just a little bit further to run to the upside anyway. So that's got some room. But right across the board, you know, I was looking at the DAX as well, and the DAX is something similar. Look at that. Really similar pattern going on here. Now that one probably is right on the neckline already, but again, inverted head and shoulders. If you can't see it, I'll just draw it on there here for you guys so you can recognize the pattern. So we got, oh, hold on a minute, I've got to calibrate this. There we go, calibrate you. I think I am number 1. No, not number 1. Maybe 2. Yep, 2. Okay. Just going to calibrate the screen so we can draw on it. We're here. There we go. Right, so we have an inverted head and shoulders. We got this left shoulder here. We got the head down there, and right shoulder there. So that's a reversal pattern. That's a bullish pattern that we should be looking really to see if there's any upside opportunities. If we don't pick it up on the shoulder, I mean, if we perceive the shoulder to be too tight or too risky for whatever reason, then we're waiting for the neckline to be broken before we enter a trade. There's potentially going to be some support here. Just thicken this pen up. There's potentially going to be some support here, but if that does bounce, it'll be difficult to get into because this area could become quite heavy resistance. So we'd want it to go through and then come back. And as it comes back, then we want to see if there's some kind of pattern that we can take along the neckline. It'll start getting quite long in the tooth if it goes on for too long. But that's the first thing. So there's an inverted head and shoulders there on the DAX. Same thing on the FTSE. As I said, that the neckline may be a little bit higher on the FTSE. It might be that the neckline actually is probably it could be. No, I'd say that probably is the cleanest area to look for a neckline, probably somewhere around about there, which might be the, you know, we might well be on top of it, but you can see same kind of pattern regardless of where that neckline is, because we're going to be too late getting in anyway, or too early. There's the inverted head and shoulders. So we're seeing really bullish patterns, and I have seen the barometers on the FTSE is about 70% of stocks in positive territory. So looking for downside would be risky, especially when you get this pattern going on. But I think at this stage, looking for upside could be equally as risky. So I'm not going to trade the FTSE long, and I'm not going to trade it short right now. We'll talk about some of these others in a moment. But just to check the US indices as well, different pattern, but still continues to grind its way higher on the S&P, and the same with the Dow. But what was the interesting indice out of all of it was the Nasdaq, because the Nasdaq has now potentially, where we're seeing the FTSE and the DAX both forming head and shoulder, inverted head and shoulders. This one is potentially forming a head and shoulders. So we maybe get this with the Nasdaq a little bit early, but it could be that we start to see just some weakness coming in with the Nasdaq. Nasdaq's got some problems because it is more exposed to China than most of the other indices, and for that very reason, any talk between Trump and WeChat and TikTok is not very good for the Nasdaq, and it could eventually affect some of these profits in some of the tech stocks. And the run to the upside since March has just been astonishing, and because of that, some kind of retracement is due, and probably some heavy retracement is due. Saw the same with gold over the weekend as well, or certainly on Friday we saw gold start to ease down a little bit. And where are you, gold? Where are you? There you are. This is starting to ease. This did start to ease down a little bit. Looking this on the daily chart, this is a fairly negative looking bar here. It's a fairly negative looking bar. Does that provide us with a buying opportunity eventually in a more appetizing space? Because that's what we're looking for with gold. Gold to come back maybe to a trend line, long way down, and it would seem at this stage it's never going to come back there. But experience tells us that markets do eventually retrace. So I'm looking for opportunities along with gold. But what's driving the dollar at the minute to the upside? And I have got a trade on in the euro dollar, and it's a short. And I'm looking for a target of 1700, or in and around 1700. So I'm not going to take any profit until it comes down to that point. Hopefully it comes down. But what's driving the dollar? And there's a few things, I think the to a degree it's kind of become a bit of a safe haven bid against what could be a significant and prolonged problem with China. We do have the resumption or some news on the phase one trade deal this week as well, and that may well put the kibosh on the euro dollar moving further to the upside. So that's why I'm quite interested in to see if there's any dollar strength coming in. Now, really, this is all about where we are in the picture, and the picture really for euro dollar is of a currency which has been just blown away with upside. And there's also quite a wide inverted head and shoulders on this. But look where we are. This is a monthly chart. This is a primary trend line. So some kind of move to the downside is fairly. I think it's we can anticipate it here that there should be some move to the downside. How heavy and deep that will be, we don't know. I'm going to aim for the 117, take some profit there if it comes down there, and then leave the rest on the table. I'll probably move stops to break even just because the move to the upside has been pretty aggressive, and also I don't have a massive faith in the dollar. But I wonder whether we could just get. Well, I mean, you don't either, do you, mate? It's been a bit of a dog, the dollar. So
absolutely.
Not and even if it does come down, I'll probably only be waiting looking ultimately for about the 114 mark, coming back down to this area here, and I'll be taking all the profit off the table there if it comes there. But I was surprised, as I said, over Friday, I was surprised to see that this market still has the legs that it does. FTSE 100, it is bullish right now, and these equities are quite bullish, and I am shocked, if I'm honest, because the deal that they were looking for in Capitol Hill wasn't done, and Donald Trump has signed this executive order, and it seems to be enough for the market to continue to push higher. But it wasn't enough, I don't think, and there's still so there's going to be some legal wranglings as well that Donald Trump is going to have to certainly navigate to but with the Democrats. So I was surprised, mate, to see that the market, I'm surprised this morning actually to see that the market is pushing higher.
Yes, but the dollar is as well, which is a little bit weird.
Yeah, there does seem to be a little bit of a safe haven play with the dollar. I think if we are looking at shorts at all, as I said, I think the Nasdaq is the one that we would look for the shorts in, which again doesn't really make me too comfortable, because I think that the Nasdaq is probably going to be the outperformer when it comes down to these equities. Mm-hmm. But for right now, I think the story does focus on tech stocks. The negative story focuses on tech stocks, and the positivity seems to be more with the S&P and with the Dow, and the Dow maybe is benefiting from being a bit of a laggard as well. As the environment changes, then people have to look for value in different areas, and there's really not much more value if we look at the S&P and the Nasdaq, which I'm struggling to find. Where that Nasdaq's gone now. Oh, where are you? There it is. Yeah, the Nasdaq, on a monthly, it's been on a such an amazing run that we are, we've reached those all-time highs, well above the all-time highs. If I can bring the chart up on all-time highs, so inevitably, I think people start looking for value elsewhere, and if they're looking for value elsewhere, then looking at something like the FTSE 100 might provide it, and also the Dow. Which appears to be what's happening. S&P is also getting fairly close to those all-time highs as well. It's got around about another maybe 2%. 2% run on the S&P. I think we could be maybe looking for a bit of a pause there. Probably another. That might be there. I know the Dow, I think, has also probably only got. That might not have much to run. The Dow may not have a lot more to run before we see just a bit of a pause in the run to the upside. It might even get to this point here before we see a genuine pause, which is still another. Well, what does that look like? Still another 3% higher. So we might see another 3% run in the Dow before we see any easing down. And as I say, equities certainly at this particular stage are incredibly hot. FTSE 100 incredibly hot this morning, and the Dow Jones Industrials pretty hot. The inverted head and shoulders is likely to at least see the neckline, and that neckline probably will coincide with this point here. Might even be that I might even look for a short in that area. Mate, it's not too much further to go. Maybe another 0.5% to the upside, but what's going to bring it down? It doesn't look like any bad news is bringing it down at the minute, or anything benign. So maybe we get a rally Monday, and then we look for the rest of the week to see if anything will actually drive this market lower. But it's not making itself known for right now.
Yeah, interesting with the Trump thing, and a question there from Shukri, and I don't know. I think the answer is yes. He has to get approval for his executive order. He has to get approval from Congress or the upper house, the lower house. Which one is it? I can never remember. Is that right or wrong?
There will be some sort of legal wranglings. I think he's got limited powers to do what he's done, so I'm pretty sure he's okay. With what he's done, but it would mean that there are other things that weren't able or aren't able to be done because he just doesn't have the power to do them, and they are probably things that need to be done. But I think he can do just a few kind of minute things in the market, maybe some tax cuts or tax relief and things like that. But I think there might even be something that he can supply to states, right across the board. But that's not, from what I gather, what the U.S. market or the U.S. economy actually needs to keep itself that keep its head above water. So maybe the step that he's taken is what the market seems to like. But I'm surprised, mate. I'm really surprised to see this market doing what it's doing. And it makes me nervous about upside. You know,
Yeah.
I am looking really for a reversal, but we can't trade it right now because it's not there. And where I would normally say, fine, the market is going high, let's trade it. I'm a bit nervous about that at these levels as well, if I'm honest. So I'm staying away from the indices currently and just seeing if I can get something out this euro dollar.
Fair enough. And I'm in agreement with you on the euro, but I'm, as you know, I sacked the US dollar a couple of weeks ago, and of course I placed 2 trades on the US dollar last week. $1 yen, which is kind of exempt from being barred. I just, it's a funny, stupid, ridiculous pair for me to trade, but every now and then I see an opportunity for it to go a long, long way, and I thought I did. I think I'm still in that. Actually, I've taken profit and moved my stops. Yeah, I'm just barely in it. So if it goes too much higher, I'll be out of that at break even pretty much. But dollar CAD, we took a trade on was it Wednesday or Thursday, and that took our money. So it's back on the barred list for me, the dollar. And you've noticed I've put 2 orders. Are you done, mate? And I'll share screen if you are. I think so.
Sorry, mate, I was muted. Yeah, done for right now.
Roger D. Okay, so with the 2 trades that I've already placed this week, Euro Aussie and Euro CAD. So I agree with you that I'm short or bearish the euro, but I've chosen the Aussie and the CAD because of their commodity status, and I think commodities will still be. I won't call them flavor of the month, but I still think they'll be in demand. So I think that's probably the way to go for me. But I totally see this one as well. And my opinion was sought from Lewis. And good happy new week to you too, Lewis, and everybody else. Alan, Shukri, John, who's in the room. Dennis, sorry I didn't say good day to everybody. Look, there's a setup there again on Euro Pound. And I'll just go, but it's on a weekly chart for me. If I have a look at last daily chart, what I see is a complete mess in here. And the failure, if you like, I also see the failure of this. You'll recall we were looking to trade a false break of this support trade line if we got a bearish decisive bar there on Thursday. Didn't happen. We got that instead, and completely indecisive, but he may be still worth a little bit of a punt on it. I didn't take it. And since then, on Friday, we've had this bar here, which failed to close below the monthly pivot yet again. This morning, we are, of course, headed in the opposite direction, which is, of course, the direction I wanted to trade in the first place. But the weekly chart is showing me a little bit better picture, in that we've got a break, again, a second break, if you like, below the ascending channel bottom line, and now a retest of that. But not only there, it's also the monthly pivot, not of just this month, but also of last month. So it's a pretty strong level that it's rejected, broken and rejected. So I totally see a setup here for entry here and stop loss here. I will place that trade. Euro Pound. So there you go. My my opinion, Lewis, is that there is a potential trade short here. And look, it's been trying and trying and trying. You can see this lower high here, and then a series of, I guess, equal highs, but we're not getting a lower low, which is the concerning factor at the moment. And that's what we're seeking here, of course, to get that lower low. And once we get that lower low, I think this will find its way down to at least the bottom of the range. So yeah, I'm willing to place this. Getting a little bit overexposed, or more exposed than I would like on the euro, but I think we'll probably be in profit on most of those by the time this gets triggered. 30, yeah, it'll be close. We shall see. But I will place the order. Again, I'll use the trade manager. And entry levels below that bar and above that bar, basically. So the entry will be at 89.80, so 0.8980. Again, just probably 0.25% because we've got a bit of risk going on the euro at the moment. 0.8980. Stop loss 0.9061. And we'll get rid of the take profit. We'll go to TP1. TP1's pretty clear to me. It'll be the open of that bar. This bar here, sorry. And that will be at, give it to me, give it to me. It's not going to. There you go. 89.42. That will be TP1. So 0.8942. And the proportion to close again will be 1/3. And we will maintain our stop loss at how many pips? 81. TP2. Yeah, it's not as clear. We might leave this one open. I'll give you an indication where I'm looking. Probably be looking in that vicinity around about 88.62-ish. I'll put it in. Why not? I can always change it. 88.62. And again, remove 1/3. And if we get it rolling, stops to entry at that point as well. And it's a sell. Oh, and it just expired. Oh my God. Okay, you know the numbers, guys. I will place it again in my own time.
You're having it today, aren't you, mate?
Ah, man, can you believe it? I need an EA that just listens to what I say rather than what I do.
It'll be invented, mate. It'll be invented. It'll be the next thing. I'm sure Kumar, if he was listening, would be on it right now.
I'm sure he would. Actually, he's given me a new one, and I haven't loaded it up. I must do that. Right, you want me to go through Euro Swissy? I didn't trade Euro Swissy, but I can see some potential there in Euro Swissy. Euro CAD and Euro Aussie are the two that I did trade. And we'll give you those in just a tick. Yeah, it's not looking too dusty. I'll come back in a bit. I don't need any more exposure to the euro, I can assure you. I am keen on Swissy and long, however, and we'll get to that one in a minute. But I'll go back through Euro Aussie and Euro CAD, no problem. So Euro Aussie simply playing a lower high and a retest of the top of our range, right? So if I go to the daily chart, you can see that we poked through the top of this range and hit a very solid resistance area, came back into the range, had a little bounce off the monthly pivot, which is something that we do like to see. We like to see it hit support and bounce, and then fail to go through the resistance again. In other words, giving us a lower high. So that's pretty much what we've got here. And what we wanted to trade was this bar here. But again, as I said yesterday in the Sunday show, if we get a gap at all, I will wait and I won't do anything until I see what happens and how that gap actually transpires. Well, as it turns out, it transpired into a classic spinning top. And I'm okay now to trade that, the low of that spinning top with the high of the lower high. So essentially that's what I'm playing. I'm playing a lower high, but I'm taking my entry lower than I had anticipated, which is interesting because it gets me below the daily pivot, and I'm quite happy about that. I think it's a little bit safer than it would have been in the first place. So that's Euro Aussie. Euro CAD. Euro CAD based on a whole bunch of things, but the CAD's not doing me any favors at the moment. It's really based on bearish engulfing bar, so potential reversal on here, and the fact that we last week were unable to close above the weekly pivot, and now today's, well, I'll get rid of that yellow line, which was the predicted weekly pivot, which became the weekly pivot. I was happy to go short below the weekly pivot, trading this bar here. Now, we did get a gap of sorts this morning, but it was very, very small. But any gap is a gap too big for me. So I waited and wanted to see that bar. That was the first 4-hour candle. And when I saw that that was headed north, then I absolutely want to go short. Black bar is not what I like to trade. So I'm actually trading this bar here on a 4-hour chart, which is the retest bar, if you like, of the broken trade line here, the support trade line that you can see in place. So we've had a break and a retest, so potential for A, B, C down here. And that's pretty much what we're trading. There's also the, more than a hint actually, if we were to use that trade line there as a false break. So I'm actually playing multiple things here. We've come underneath here. We've retested it, both the trade line, the daily pivot today, weekly pivot, if you like, thrown in there as well. We've got a lower high. The one thing we don't have is a lower low. And if you throw one more thing in, and I do have a second order placed on this, if you're interested, and it's underneath this bar here. You can't see that. I think I've got the parameters here somewhere. I'll show those to you. So the second order on EuroCAD is playing a little pattern that I like to see on a support trade line. And the order for that one is here. I don't know whose template I'm using here, but it's not mine. The entry for that has also, it's expired. I can't see it. Or was that the other one? Now I'm confused. 157.48 is the one that we're in, which was this one, the one that I've just described to you. The other order is probably the one I gave you, is it? EuroCAD, where is it? There it is. No, it's the same trade. Okay, I'll give you the other order, which appears to have disappeared somehow, is short at 1.5730. And the stop loss is 1.5789. So you can see where I've got my first take profit level on the first one. Just below that, I've got an entry on the second order short trading this bar here. Okay. First take profit will be just before that low. And second take profit, I haven't decided yet. I'll just trail that one as I get there. Hello, Big O. Big O's in the room. So that is EuroCAD sorted, Euro Aussie sorted, and Euro Swissy. I don't have a trade. Swissy Yen was the other one. And the Big O is keen on Kiwi, or is that just a big statement? So Swissy Yen last, what was it, 2 weeks ago? And this is a really hard chart to describe to you, Swissy Yen, because of that scenario. And I can't change it. I can't make it any better. But my analysis said that we'd broken out of this range here with this bar. And then we got a second breakout with this bar here. and this is a monthly chart I'm looking at, and then a third breakout with that bar, and I'm just screaming for a pullback. And that pullback was hopefully going to be the weekly pivot today. Don't know how that's setting up. It's kind of there, but I don't like the candles. Yeah, it's kind of messy. I'm not sure what I need to see here. Maybe I just need to see this break that level and then come back and retest it. That might be cool. So I am keen on Swissy and long. Orlando, Kiwi US dollar. What did you want to say, my friend? Kiwi US dollar. I should have one here somewhere. There it is. Lewis, short Kiwi US dollar. It's breaking the monthly pivot. Yes, for the third time. Make that the fourth time. I wonder, is this the one? I don't know. We do have, of course, the RBNZ meeting on Wednesday. I'm just not sure this has got the strength to get through here right now. I don't know. Look, it will only benefit me if it does, I've got to say, because I'm still long pound Kiwi, and that seems to be going okay. Still long pound Aussie as well. How's that one going? That's coming back a bit as well. So more than happy if it does, but I've got an issue there until this does break the monthly pivot. How would I like to look at that? Frankly, let's see what trade lines we've got available. Probably that one through there. Break, take out this low, retest becomes interesting. Maybe that's the way to get into this. Untested weekly pivot, untested daily pivot. I'm not short on that today just yet. Not just yet. I'll be waiting on that one. So I'd really like to see it take this low out, then come back and retest it. But this spooks me. Weekly pivot, daily pivot untested. I know it's only the first day of the week, but when they're close together, by gee, they've got a strong magnetic attraction, those pivots, most definitely. And I won't be going short this one just yet. But if it does, happy days. More than happy to see it. So, guys,
where are you seeing all the questions and comments, mate? I can't see them.
In YouTube?
We're on YouTube, are we? Let me just have another look.
Yep. So, Big O, if you got to close below the monthly pivot, that's good enough for you? Or do you want to see a retest as well? Yeah, on the dollar index, close above 94 as well. Okay. Yeah, look, the dollar index is a clanger, and it does look like I might as well share that as well. Or did you share that before?
No, mate. We looked at the euro dollar before, which is as close as we can get to on Fusion for a dollar index chart.
Yes, unfortunately.
Yeah, yeah, it's just kind of hit a bit of resistance, isn't it? It's got a double bottom down there, and maybe some sort of W pattern, maybe possibly. Looks like a reversal pattern is trying to form. So can it get through is the big question, isn't it? And I agree with Orlando. I think if we can close above 94, we should be in good shape.
Which is this level here.
Right. I couldn't get to it quick enough.
So yes, if we break that high, which is really the breakout level, isn't it? I would concur with that. And I think there's a strong target here as well. But then I said there was a strong target about there somewhere. And then I said there was a strong target about there somewhere, and then there somewhere. So yeah, it just hasn't come back.
It's just, I think down here it's maybe more significant because of the longer term time frame. The primary chart really is really is quite significant. The monthly charts are really quite significant now, I think, on the dollar, and some sort of relief rally, if nothing else, should be in play. And we're seeing it, right across the board. Gold is having
they're all trying to do something, aren't they?
They are. Gold's a bit sleepy today, and the euro dollar's a bit sleepy today. So if we're sort of like looking around at the ones that we could use maybe as barometers, they seem a bit sleepy. Don't see the same happening with Bitcoin, to be fair, and I don't see the same happening with Ethereum. So cryptos aren't suffering quite as much, but again, they are, I think, showing signs that they could be at a bit of a turning point. So who knows? It could happen, but it's really what I was saying about these equities generally. These markets generally. All of them are, I can't say overdone, but they've all rallied so hard, and we are kind of entering into that point in the year where equities tend to be a little bit weaker. We've got certain things that are bumps in the road as well that may well be traded upon. So I've got a few more doubts about trying to continue to pick up any moves to the upside from this particular spot. Even with gold, I wonder whether we could get a bit of retracement just for a period, and we could actually aim for a decent price, rather than trying to jump onto a rally which may well be done. But if we were looking at the VIX as an example, VIX is just going. It's just dead. People certainly aren't buying protection there. I do see that there is maybe some buying with a few treasuries, but maybe the VIX doesn't really give us a fantastic indication that we're going to get a massive dip to the downside. But I think a bit of a retracement, a bit of a pullback is probably around about due. And I think the time of year that we're in, it would suggest that if it's going to happen, then this would be as good a time as any to be looking for it.
You've got your monthly trend line on the euro US dollar.
Yeah.
Pretty much at price, haven't you?
Yes.
Well, mine misses by a long way.
So your monthly, let me just have a look. My euro dollar.
But then I've got like double trouble over here. I've got no idea why this chart does that. Let me see what it's like on Fusion.
Yeah, so I've got a high.
Are you on what? Are you on Fusion?
I'm on Axie at the minute, but I will check Fusion as well. Now hold on a minute. Hold on a minute. No, I think it was Fusion that.
Yeah, Fusion's got it.
Wow, Fusion's got it. Yep. Yeah, it is actually, because I'm actually looking on Axie. I mean, I did trade it on Fusion. It looks like the high of 2011, May 2011. Unfortunately, actually, Axie doesn't go back that far. So yeah, I don't have a 2011, but I will have a look on. I've got another piece of software that might well give me a clearer picture on this. Let me see.
You're completely entitled to think that it's got to do something here. Have a little bit of a retrace, surely.
Yeah, I think so, mate. And this is the thing, isn't it? Is that trying to trade on fundamentals is a difficult. It's a really difficult way to trade in many respects, because it doesn't give you timing. It just gives you an overview. Many times it doesn't really give you the timing of what's going to happen and when it's going to happen. Yes, you can sort of trade on those daily news points, which could give you a bit of timing, but you'll be unlikely to pick out a high in a downtrend and a low in an uptrend. You're probably more likely to kind of have the trade after the move has kind of got on its way. So we need the charts to help us out, and oftentimes we'll see a point on the chart that is more of a resting area than anything else, while it waits for the fundamental driver to kind of catch up and give us the absolute reason it's going to go. I wonder whether we could have some announcements this week that could actually drive it. You know, as I say, I think we'll be talking about the dollar and euro trade. Sorry, the dollar and Chinese trade. The US and Chinese trade deal. The phase one trade deal that's kind of coming into play. So I wonder whether we do have a potential for a driver, but
yeah, outside that, there's not a whole lot from a US dollar point of view, or I guess
no. Well, except for this
point of view.
No, except for this deal. Except for this deal that needs to be passed, and obviously, you know, this growing story about the pandemic. The unemployment numbers on Friday were still grim, but they were a beat of expectation, and because yes, we do seem to be in a bit of a recovery stage right now, then a move higher in equities, yes, it makes sense, but just not at the levels we're at. You know, we are practically back to where we started before this huge turn to the downside, and yet we are in a situation where some companies are folding and some companies are you know, many companies are firing. So you know, I would have thought we'd be starting from a much lower base. Yes, going higher, but maybe just grinding higher rather than having this astonishing move to the upside. Now, what drives that? I don't know. You know, maybe it is just this new environment that makes it so much easier for retail traders to be involved in the market. You know, we've got this kind of Robin Hood scenario going on. And you know, it could mean that those people are going to get extremely and badly burned when the market makers decide to turn this thing over, because it seems to make sense for it to turn over. You know, it doesn't make sense for the valuations to be where they are, but sense doesn't really cut it. You know, it's a bit like saying that the economy is the stock market, which it isn't. You know, we know the economy is in terrible shape, but it isn't the stock market because stocks can continue to make profits by cutting back on you know, basically cutting costs and remain at similar price to earnings ratios, which ultimately is the metric that people are after. You know, if they've got a decent price to earnings ratio, they've got dividend getting paid, why wouldn't you invest in a stock? Regardless of what's going on with the economy and regardless of what's going on with employment, the big thing comes in about the consumer. Does the consumer, that's the number that we're really watching, not the unemployment numbers. That yes, there is a direct correlation, but until we see those consumer numbers start to genuinely weaken, then we're just going to assume that that the aid that is being pushed out there is continuing to allow people to spend, and if they're spending, stocks will go higher. You know, if products are being sold, then stocks will go higher. But
got to have jobs to have money to spend. That's the
key, isn't it? That's the key, and that's what we all know. However, if there is enough aid out there, then the jobs don't become as important as people's disposable income, disposable cash. And if the government and the Fed are giving people disposable cash regardless of a job, then they will spend. And people's habits need to change before we really see the markets turn around, because the unemployment numbers, you know, I think I always look at them with interest, but it's a bit like you always say about NFP. I know it's not called that anymore, but you know, we like to be old school. So it's a bit like what you said about NFP. The number just doesn't mean as much as it used to, and I think it's for that very reason. It's just that the employment doesn't actually matter as much as stimulus, because it's stimulus which allows people, as I say, to kind of splurge and get themselves into all sorts of trouble. I mean, yes, it kicks the can down the road, and eventually the stock market will be the economy. But it's just you know, the correlation is so far apart for most of the time that we can't trade on economic numbers like employment. You know. To a degree, unless they're good. If they're good, then people will buy. If they're bad, people will probably buy. So it's just, you know, it's kind of it confounds things really when we look at some of these numbers, because as I said before, the economy and the stock market are two completely different things in many respects.
Yeah, Shukri, you're going to share a few things there tomorrow with your machine learning. Okay, that's interesting. I'll have to watch the recording of that. Wow, did I get held down yesterday in the Sunday show when I started mentioning things like new reserve currencies and the potential emergencies of I didn't use the word takeover, but the emergence of cryptos may well come further into play. Oh, it didn't go down too well. Nobody liked that.
Nobody like what?
Like me even going in that direction. That was a no-no.
In what direction? Well, the cryptos thing.
Well, talking about
Oh, I see.
The buzz around the place at the moment is, of course,
I see. Yeah.
that and I've read this in a few places, but it's hardly news that the US dollar may be under threat as the world's reserve currency. Yeah. And I thought that was worth the conversation. Yeah. But nobody else thought it was worth a conversation at all.
Yeah, I mean, it's interesting, isn't it, mate? Because, I have to say, I'm in 100% agreement with you. Yeah, and I think many people are. And the difficult thing is, of course, we don't know. But if we just completely bury our head into the sand and say that it's not going to happen, because history suggests that it's not going to happen, then you could probably go back to another point in history and say, well, it does happen, because otherwise we'd still be using the lira. I mean, I'm going to say about the Roman Empire, I'm going to guess they used the lira, but I'm sure they didn't. But we'd still be using tablets. Something. The tablet, yeah, we'd still be using stone tablets, So of course currencies change, and of course reserve currencies and the major currencies change, and we may well be living through it. I think this is the thing, isn't it? You just don't expect it to happen necessarily in your lifetime, but we may well be living through it, and we can't discard the fact that there are issues out there with just unbelievable amounts of debt that create these kind of problems when you get economies and countries that just are so have so much blubber around them because they've consumed so so heavily and decadently that eventually, of course, they kind of they just get a little bit too overinflated and things change again. Now, well, it might not be that
you spoke about it only moments ago. If the governments continue to pump funds into the economy to keep the economies afloat, then suddenly there's, instead of being however many trillion US dollars in circulation there are right now, that doubles or triples or quadruples or whatever the case may be. If everybody does it, then countries like, I don't know, let's say third world countries, suddenly their currency has got to improve in value, hasn't it? Against the US dollar?
They're absolutely right, mate. And the other thing about that is that we reached a quite a significant point in history in the last 100 years. Maybe slightly less than that, maybe the last 70 years. But after the Second World War, when the West decided to let the rest of the world in and share in some wealth, and we do actually have countries like you go back like 15, 20 years, maybe even 10 to 15 years, what was happening in China? China wasn't on the world stage, and all of a sudden it is one of the biggest, if not the biggest economy on the planet. And and more and more countries are moving from third world into this kind of middle income range because the West decided, okay, hold on a minute, this actually what we've been doing by enjoying the resources of everybody else, it is not going to cut it, or it's just not fair. So inevitably there will be a paradigm shift in who really controls the world. Now, you hope that as these countries actually come up and come into come into the world stage, that they are more generous in the way that they enjoy their wealth than the West was. But I think there's probably going to be some, I guess it's inevitable that you're going to get some countries which are just very, very irresponsible with their growth story. But countries, Africa, much more affluent than it was, 20 to 50 years ago. China, obviously, Asia, parts of Asia. So more and more of the world economies are coming into this kind of middle band, this middle range of income, and we are, closing the gap on. Now, I'm not saying that the gap of the extreme poverty to the extreme wealth is still there, because of course it is, but we are closing the gap on a general basis, right across the globe, of the countries that are now being able to step up. Bretton Woods, yes, I mean that kind of Shukri said about Bretton Woods, yeah, that kind of, that could come back again, and this is the thing. I think you could find any point in history and say this has happened before. You could go back and say the US economy will fail, because these big economies do fail. This has happened before. Go back to the Roman Empire, and then the British Empire, and now we're sort of maybe coming to the end of the reign of the US. Who knows? Who knows? But yeah, you could go back anywhere and say
well, I'm pretty confident we are, and I've been saying it for years. But now I think it's really coming into a place where it could happen.
Yeah.
So I'm not ruling it out in any way, shape, or form.
No, mate. And this is interesting, isn't it? That we have a chance to live through this, and we've got to be positioned, if we can, to take advantage of it. Doesn't mean we need to panic.
It was a good topic to have a little chat about. Frankly, do.
Yeah. But nobody else did. Was the tumbleweeds? Was it?
Well, and look, I totally get the reasons, and the reasons. We were there to talk about our trades upcoming for the week, and that's the forum that you're in. So I suppose under those conditions, yes, it's not the right forum, but then let's create one where I'd love to see these people who are fundamentally based in the way they trade and the way they think, to actually talk about that and tell us their impressions. What happened last time we had a quantum shift, and et cetera. Julian be awesome at that, because
he would, mate. Do you know what's really interesting as well is that somebody's asking Alan's saying, how do you position yourself short dollar? And I don't think you can go quite as precise as that. I really think that if you're going to protect yourself in a changing market with, to be fair, no idea of what's coming, nobody can have any idea what's coming, because it doesn't take, really, if we think about it, every trade we take is either going to win or it's going to lose. We don't know the outcome of every trade. We don't know the outcome of any of our trades. We're just trying to kind of like give ourselves an edge. And the only way that you can smooth out the potential to make or lose money, you won't make as much when it goes up, but you won't lose as much when it goes down, is not by focusing on something like the dollar, but you have to focus on Bitcoin, potentially Ethereum, possibly Cardano, gold, silver, stocks, the dollar.
Diversification, as it's always
that's the point. Yeah, that's the point. You've got to diversify, and if you don't diversify, then you are gambling. We're all gambling anyway. There's no two ways about that. The trading is a gambling industry with an edge, but it's a professional gambler's environment.
Mm-hmm.
But you are, that's what we're trying to do anyway. With the approach, you're trying to be professional about it. But the way that you can mitigate some of the risk of your gamble is by, as you say, diversification. So that's all we can do. Just try and get on a basket of things, and you can do that in one of two ways. You continue to trade short term, in and out, or you try and get yourself some investments, and spread yourself over many markets.
Yeah, if I wasn't short already Euro CAD, I'd be looking to get short Euro CAD. I think there's a nice little entry underneath that bar, pretty much where I entered the market anyway. Just under here with a stop loss here on the 30-minute chart. I think that's worth a little bit of a punt. I'm too exposed on the euro to be adding in any more positions, so I won't be. I'd like to get that forum happening. Shukri, in fact, I'll make it my little project to get that one happening. How are you going, mate? Anything else?
No, I mean
trading wise?
I think the first hour has been, it has been a pretty interesting one. We've seen the FTSE 100, along with the Dow and the S&P, push to the upside for about the first 45 minutes, and then just to start to dive down towards the top of the hour. It's kind of back on that neckline, and it's giving us a reversal pattern. Can I look at this as a short? Let's have a look. Let's have a look. Is there a short on here that we can take?
This is unusual. You and I both short euro. Very, very much biased that way.
Yeah, I mean, I don't tend to trade currencies, as you know, mate. But I just got a bit of a feeling about the dollar, and I didn't want to I didn't want to trade it against gold, but I didn't want to miss out on the move either. Quite like it under this bar. Let's just see if that's the best possible price that we're likely to get. Okay, I'm gonna have a look at this. Now, it might be that we're going to take this in the US session. I feel like we might be 20 pips away from where we would have wanted to be. Okay, so this particular price is no good, and I'll show you why. And the reason is because we are here. Or maybe most specifically, we're here. So I know this is only a 5-minute chart, but this is a buy area. Now, the sell area is not as crystal clear unless we go out to our longer term time frame and say that's the area there, which is why I wonder whether we might be about 20 pips away. Wouldn't mind a little order here on this one. Maybe it's 60.73. You can see again, looking here, that's an area of support. So we can't trade that. If it was to come through that area, then I'd be interested here. I might just put a little punt in here, mate. I'm going to do that. Just a nice light one.
Yep.
I'm going to put it in at the top of this bar here. So 60.73 is the sell. So I'm going to put in a sell limit, and it's going to be 60.73. Now, the reason I'm going to do it here is because, I quite like the downside, and I think that there's a chance that where should we whack a stop? Let's put a stop. Let's put a stop at 61.25. In fact, let's put it at 61.30 just to kind of get it out of the way, and then we can always manage it properly. 61.30 for our stop. So just put an order in the market there. I'll write up the parameters just for you guys. This area here is not a bad. It's not a bad price point, but I don't like the pattern currently. So I'd want it to go through first, and if it did, actually that's not too bad either. Let's just have a look at 60.64 very quickly and see what that looks like. 60.64, not bad, not bad. Let me just see what that one is there. Yeah, it might be a bit ambitious actually at 74. Just going to lower this down. I'm going to go in at 60.64. Doesn't look too bad. Now, this price point would be of interest, but it's got to break down first because there's still, potential support lines coming in here and here. So it'd have to break it down, and then we can maybe look at that price point. But I'm going to lower that down just a little bit to 60.64. And the stop's going to be 61.21. I think that's okay. I think that's okay. I don't see... Yeah, that's nicely out of the way. So I'll write it in for you guys here, what I'm doing. So
we're very active for a Monday. We've got what, 1, 2, 3, 4, 5 orders in the market. Or in fact,
tell you what, mate, the market is quite active, isn't it? Anyway,
yeah,
60.64. There's a few things I don't like about this, but which is one of the reasons I'm not going to take it at price, and I'll just quickly share that because there might be a question of there's a stop loss there. Really targets to this low down here. You know, if we're going to get some weakness, if we believe in some longer term weakness, then we got to aim at 58.60, I think. So TP1 is at 60. Sorry, 58.60. 63 it looks like. There's our TP1 area. I think we can do, but you know, with you, mate, yeah, we are a bit active, but as I say, the market's quite active. One of the reasons I don't want to take it at price, which I'm normally not hugely averse to, but one of the reasons I'm not that keen at price is because we have. Let me see if I can bring this up properly or not. I'm not going to. Don't know if my system is running extremely hot here, but it's struggling to open up all my apps. It's got the important ones open, but I'm going to close one up here. 1 second. Let's see if we can get another twist in here. Yeah, my system's been pretty sticky recently. Right, here we go. Right, so we have got, and the reason that I'm not keen on just entering at market, and I've got still some suspicions that we may well hold on, is that we are actually, you know what, we've seen a massive dive. The first time I've looked at the barometers for a while, 53% of stocks are in positive territory, which sounds like it's pretty good. But if I tell you that when we approached these highs up here, the barometers from positive to negative in stocks was 83%. So we've had an 83% stock rally, if you like. So 83% of UK stocks were in positive territory here, and now we've dipped down to 53%. So we've had 30 stocks dip into negative territory in a very, very short space of time. Now, it might not seem or sound that significant, but I can tell you it is. You know, I watch this stuff quite a lot when I'm looking to trade. So I'm liking this a bit more now. It doesn't mean I'm going to enter this price. I still want my price point, and I'm wondering, is that going to be too? Is that too low? Let me just double check this, man. I want to make sure I get the best possible value here. Shift him up a bit there. No, that's on a 5. Right, I'm going to have to do a tiny bit of analysis here just to sort of see whether that is the most likely price. 20 pips higher than where we are now is what I'm kind of getting told here. So yeah, I think that's about right. You know, so it's actually I've got it in at 60.67, 60.63, 60.67. It's in that range. I'm going to leave it here and see if I can get a little bit of a boost to the upside. But I quite like the potential for a short here. So let's just move this to 60.67 and see if the market will come up and play ball with me. And that is the result of the work today. I don't think there's going to be anything else that I'll be doing, mate. I think that's what I'd like to. That's what I'd like to trade. That's what I'd like to see. Stops are there, you know, going to keep us out of trouble if we're wrong on this. But barometers are suggesting some weakness in the market here. If everybody's got those numbers, I'm just gonna delete them and look at the S&P. Also, just a little bit of trouble here on the S&P. No major bars closed down there. No major pattern there to suggest that we are definitely going lower, but the 15 is showing some weakness here. Looks like it's broken through, on a short-term basis. So if we're analysing, that the scraps here, then the scraps are telling us that there could well be some weakness coming in here. So quite like the FTSE for that. And let's just double check the Dow and the DAX. DAX has had some problems getting through this inverted head and shoulders neckline. And I think Orlando and I are both of the same opinion on the DAX, that it probably could do with coming down a little bit for a potential buying opportunity. But it certainly looks, out of most of them, which again, I find it a shade surprising. Out of most of them, I think the DAX is probably looking like the one that is the weakest of most of the European equities, and even the FTSE taken into account there. I'm not sure if that's the neckline or it might be somewhere else, but certainly patterns amongst patterns here which are suggesting that that the DAX could be a selling opportunity. Maybe the line is not very clean, but in existence around about there for a neckline. Could be around about there, but it does look like there's certainly some potential reversal pattern that might attempt to get back down to this point with the DAX. That's not where I'd like to buy, unless it was there at the end of August. So there's a possibility that the DAX is going to be more of a timing thing than anything else. But yeah, it looks a little bit weak out there from what I can see, mate. How's that euro doing? Euro's sticking where it is, nowhere near my profit level, so I've got to leave that alone as well. But that is that.
So we're short the euro. We've got an order short the FTSE. We've got an order short euro Aussie. We're in one position on euro CAD, waiting for a second to trigger on euro CAD. We have, what else? Euro pound on the weekly chart. We've got a short order there. Goodness me, if the euro goes short, we should be doing okay. But there's a warning signal for those of you guys. Make sure you are aggregating your risk, because there's a lot of positions short the euro at the moment over 3 or 4 different currency pairs. So
just pick the best, I suppose. What would you say, mate? Just pick the best. Don't have to go short all of them.
Or if you want to, you can spread it around a little bit, but just make sure you aggregate your risk to whatever your parameters are.
Yeah.
Simple as that.
Yeah, that's quite good actually. I mean, I suppose if if you're going to risk 1% on a euro trade, to put a third of a percent on each, quite a nice way to spread the as you say, spread the risk around about and aggregate the risk a little bit. So
I often do it if I see the setups that are there. I often do that.
Yeah.
And as I say, I don't trust the dollar at the moment, so I'm much preferring to trade against the other currencies.
Yeah. Yeah, like you're thinking. You haven't got euro pound in by any chance, have you?
Yes, I have.
You have. Good.
I'm not in, but I'm trading that on a weekly chart, short at 89.80. So we're 35 pips away from entry there at the moment.
All right. Come on, that one.
I was in euro pound last week once, and that turned out to be a break-even trade, I believe, if my memory serves me correctly. But I was going to leave it alone on the daily chart, but when Lewis asked me that question earlier, and I had a look at the weekly does look like a setup to me. So happy to take that.
Yeah, I like that. I like it, and I'm biased on that because I want it to come down just because. It's the one that costs me the money. That one.
Oh, okay. Well, let's hope it rectifies that situation. And I'm okay if the pound goes long, and I'm okay if the Kiwi goes short.
All right, mate. That sounds good. Just have it.
You bet. That'll do me for the day then, until the US session kicks in, and hopefully we've got something in the bank by then. I kind of think we won't, because I don't think we're going to move too far now between now and US Open, but you never know.
Yeah, it would be good, wouldn't it? Dennis, I must be the only person long euro. It doesn't matter, mate. You know what? It doesn't matter. You only need sort of like one of the other big guns to be in agreement with you, and you're right and we're wrong, and
absolutely,
and that's that. So don't worry about that. Don't change your methodology if you've seen something that you should trade, as long as you're not over leveraged. That's always the thing. If you're worried about the trade, it suggests that you've got too much money on. If you're not worried about the trade, that to me sounds professional, and that's the way you should be thinking. So it's who knows who's going to be right. It really doesn't make any difference on a trade by trade basis. Either one of us might be right on that one.
Henry and Philip, I see you've got comments on Facebook, and it would have been nice to tell people on YouTube it was not working on YouTube. Okay, I get where you're coming from, but that doesn't make any sense, because if I was on YouTube, I would I would have been able to, and we did, frankly. We did say that a couple of times that it wasn't working on YouTube, but it is now working on YouTube. My apologies if you got misled, but we did say that a couple of times.
I did cover that, mate. I did. I was saying as well, you know, but I did apologise to Phil earlier on. It's terrible, really, for us, because we're trying to trade, and we're trying to sort of look at the market, and the last thing we need is these technological things to kind of not play ball for us, because it is the last thing on our mind, and we can't be focusing on it. We can't be focusing on whether it's working on YouTube and Facebook, because our primary concern is protecting our money. And yes, you know, to help every trader that comes in our room is incredibly important to us. But we just have to expect that this stuff is going to work for us when we click the buttons, because we clicked all the right buttons. So if it doesn't work, then as Jeff says, we are really sorry about it. But
in fact, it pisses us off big time.
It does.
But we're like those guys up in the spacecraft. You know, if Houston's got a problem, then there's not a lot we can do about it, I'm afraid.
No.
Sadly.
No, and the thing is, we can't scrabble around trying to get YouTube and Facebook to work when we got money on the line. If we got open trades, then we got to scrabble around trying to make sure that they're going well first and foremost. So,
I did hear you say that earlier, mate. I didn't know you were talking to Philip.
Yeah, and it's not sort of it's a fair comment, to expect it to work, but we're the same. We expect it to work as well, and it is incredibly irritating. Jeff and I aren't particularly tech. Do you know what? I'm not even going to say tech savvy. We're just not bothered.
When you say particularly, I'm not even close.
No. I mean, I care that we talk to people, but I don't care whether it's on YouTube or Facebook. Facebook, if I'm honest, Facebook irritates out of me. I don't like Facebook really at all. There's a couple of things I like about it.
Yeah, I noticed that you keep sending me bloody quizzes.
That's the only thing I like about it. But otherwise, mate, Facebook, just I find it really irritating. Actually, really, it kind of it's like a drill in my brain sometimes. Facebook, it's just so noisy.
Unfortunately, it's something that we can't ignore as business folk. It's just a tool, and a tool that we have to use, I'm afraid.
Yeah, and we will continue.
And it is a tool, a real tool.
Yeah.
Righto. So we've got all those positions on the euro, and look, who was it? Dennis, you're long the euro. So look, if you've been long the euro for a while, you're doing pretty bloody good. And you've got to take into consideration that all these positions short are extremely counter trend and extremely counter momentum. So, we're the ones that are in a risky situation at the end of the day. And that's why, I'm really being very, very sure about or cautious in saying to you guys that you really want to keep your risks here low, because it is so strong, the euro against the dollar. And I'm not fooled by 1 second, because the world's starting to talk a euro dollar rally. I've been looking for a dollar rally for months, as I said, but only to a point, because I think it's lost its mojo. And I have no reason to think that will stop anytime soon. Retrace, yes. Stop, no. I think the dollar's in all sorts. And I think any rally is an excellent selling opportunity for the dollar. So same applies to the euro versus the dollar. I think it's a retracement that we're ultimately trading here, not a potential reversal. Of course, it's potential but reversal, but I don't think it's going to reverse like 20% or anything like that. We will see.
I agree.
So I'm done until the US session.
Yeah, me too, mate. Yeah, we'll see those of you tomorrow in the UK session, and we will see those of you who will be involved in the US session at 2:00. Facebook for old people. No, what's this? Yeetie needs to be YouTube needs to be refreshed if not there initially. Okay, cool. Restart the app. Not bothered about YouTube live show. Facebook's for old people. No Instagram. I don't know. I don't know whether. do you know what it is with Facebook? It's just people just post absolute rubbish.
Yes, that's true.
It's just and that's why I find it really noisy. Everybody just talks so much rubbish on it, and
Don't you really want to know what your neighbour had for breakfast?
I just don't like the way that it's always kind of. What's that?
So what's wrong with you? You don't want to know this?
Well, do you know? I know what my neighbour has for breakfast because I'm running out of ideas. So I wouldn't mind if there's something else out there that I can eat. It's always the fact that everything looks amazing. It looks amazing, and I know some of the people that post on Facebook about their amazing life, and I know their life isn't amazing. So I just wish that they'd just tell the truth. And that's my problem with it. Maybe it's just a really good instrument for lying.
There's a lot of BS.
Lie book or something. I don't know. Anyway, we mustn't get drawn into that, mate. I think it might offend some people.
Guys, we didn't actually do anything with YouTube. It just started.
Yeah, it did.
I could see it wasn't starting at the instant we started the show, but for some reason it just went and came good. And I restarted the app, as you say, Crystal, 2 or 3 times, and kind of weird. I don't know. Anyway, hopefully tomorrow it will be different. Technology, boy, gotta love it. Yeah, or not. Shutting up now.
Yeah. All right, guys. We'll see you tomorrow at 5 to 8.
That is a date, and don't be late. Sorry for the false start, guys.